Okay, I'm now gonna invite the expert panel members to get on screen as well, because now we're gonna go over that aspect and hear their views, because there were some very interesting insights that came now. So now all the hope is on Dr. Christof, Engelskirchen, Matthew Freeman, Rick Zielman, and Andrew Shields again. The hopes are on you to finally explain and give them a good outlook. Is that fair to say?
We'll try.
I know it will be a challenge. I think it's a challenge for everyone, or it certainly has been. Now, one of the questions that I would like to start, and please attendees on the add in your questions as you feel. One of the key questions I think, which is a good one to start with, is it even possible to forecast residual values now? Because we all know it is critical for the industry. It's critical for correct pricing. There are so many external factors. So how has this worked for now? And let me start with Matthew, just to pick, and others then can come in as well.
Oh, good. Thank you, Johan. It's great of you to choose me first. Yeah, we have to be able to give a view. I mean, that's what we do. It's our business to have a view of the marketplace and to have some understanding of what's, to build an understanding of what's happening. It is a challenging time to be doing this. We are living through unprecedented is an overused word at the moment, but that's the word everyone uses. It's very difficult. It's very challenging. But at the same time, we do know that we're dealing with some known quantities. We know what consumers' activities are. We have an understanding of the legislation and the regulations that we have in place and are coming in place. So we have a number of fixed points that we can tack to and we can work with. But yes, I will agree with you. It's very challenging to do this. But we have to give a view, and a view is what we give. I mean, I don't know what my colleagues would say to that.
Yeah, I think if I can come in, thanks for starting, Matt. I think forecasting is becoming difficult whenever there are disruptors and things happening that are disrupting supply and demand as much as we are seeing at the moment. No one could have anticipated how long COVID-19 would run, that the chip crisis would be going on more and more. But even the pandemic in itself, right? And we can forecast the impact of economic crises on residual values. We have a lot of data on that, but the pandemic, for example, didn't have so much impact on economies because there was so strong, monetary and fiscal intervention happening, which was, again, of course, good. But anticipating that is difficult. But providing transparency on not just the forecast, but why you're coming to that conclusion, why you're forecasting the way you do. I think that's the way forward. And what we always do is we always are very transparent of what we forecasted in the past and what we are forecasting now, and help bridge that gap. And I think that's the value in forecasting at this time.
Okay, thanks. What about the situation in Holland, Rick? Yes, I don't know if I can say Holland, or is it the Netherlands? I probably need to say
the Netherlands.
Netherlands. Yeah, I know.
The Netherlands. Holland is actually only 2 provinces of the Netherlands. So I think, on the short-term basis, European scarcity will keep prices high. And on the longer term, we will see a much stronger influence on technological developments in batteries, hydrogen, and also governmental and environmental penalties will play a big role for the ICE cars.
Has there been any, of course, we know that we probably all know that at leasing companies, they use models, regression models with a lot of data going in. Of course, when we started with electric vehicles, it was a very hard one to use the same method. In the poll so far, I see that forecasting the residual value of a BV is 71.4 8% says hard. So is there another method that someone has created that you can share? Open question.
I think if I kind of also part answer the previous question and come in on this one. So somebody once told me that there are two sorts of forecasts, lucky and wrong, which probably doesn't say much for the forecasting industry, but at the end of the day, it's an interesting way of looking at it. I think the challenge that we have is, and actually the next question for me is forecasting battery electric vehicle residual values getting easier? And I think the answer to that is yes, it is. Why? Because we're now beginning to see more stable data coming into the marketplace on what is actually happening. If we go back to 2 years' time, 3 years' time, when people were asking the same question in terms of what would be the future of battery electric vehicles, there were so many imponderables in the market that it was virtually impossible. We were kind of making it up as an industry as we went along to try and understand what would be the key drivers within the market in terms of taxation, in terms of adoption, in terms of supply and demand, legislation. All those elements were really, really, really difficult to understand. As we stand at the moment, we get much greater clarity. One, we've got a data set which allows us to understand what's there. Two is we're getting to a point where we're understanding some of the key drivers that are there. So if we take the legislative situation, we understand now for a lot of markets what the taxation regimes are, and a lot of governments are being very clear in terms of current support to battery electric vehicle tax and subsidies that they put in. They're going to last for a particular period of time, and governments are saying it's the next 5 years, etc. So again, as an industry, we've got a clearer set of drivers and a clearer set of scope and scale of when those drivers are going to operate and for how long for. So from that perspective, it's getting easier. It's still not a perfect environment, and I think we're at a point where we still, all of us, need to keep looking and looking and looking, because at the end of the day, it is certainly harder to forecast battery electric vehicle residual values compared to internal combustion ones were historically. But as I said, I think it is getting easier because the key driving steep factors, social, technological, environmental, economic, political, are becoming more known about, and therefore we are in a better place to share those with everybody, and for everybody to pick those up.
Okay. Maybe Christof. Yeah, I'm coming to you also, but well, I was planning to come to you now, so you can react to what has been said before, but also to take maybe the question from Alin. What's the effect of the current energy crisis on the cost of basically running a BEV? You've got a very extensive, like also Matt has a total cost of ownership database, and there you will probably see some changes. Is that only affecting BEVs, or has fuel prices also done the same thing for ICE vehicles?
Yeah, so I mean, I think that it's exactly what you just said. So we see rising energy prices, but we also see rising oil prices, right? Because they're often quite connected. So the relative advantage stays intact. Yeah. So service maintenance, repair, service maintenance costs for a new battery electric vehicle is highly attractive. Yeah, and if you can get that clarity, for example, also in how leasing companies are giving you quotes for this share of the leasing rate, right? So they are being attractively priced from a service and maintenance perspective. Yeah, and I just wanted to add a bit more context to the question: how difficult is it or is it impossible to forecast BEVs, and how difficult is it? And we have to realize that we're at a tipping point now, right? So what all the players also listening to us now are concerned with is electric vehicle forecasting. So everyone that puts them in a contract, in a PCP leasing contract. They are setting residual values. They are making a bet on the future. So we are all calculating forecast values for BEVs, and what we have seen is what we've heard before to some extent, that there is more robust data informing our models. For example, life cycle depreciation. We have a lot of robust data on the BEV, and it's non-negotiable, right? We know that it's depreciating faster over its life cycle. We know the reasons for them, and we can forecast how range is developing and what impact range has in terms of RV setting. And with that additional data, we can also now start to do some back testing, right? So we can calculate what is the value of a kilometer of range, in terms of residual value. How is that correlating with remarketing performance? So we are at a point where the data we observe is so much more relevant, to feed into databases and into algorithms, that it becomes much easier to forecast the BEV in a stable market environment. And the second part of that answer is, so how is the macroeconomic development for ICE and BEV? How is that happening? And that's an overlay, right? And if you put all of this together, kind of like in a waterfall chart, if you want to understand a forecast, you always have to know what are the building blocks of that forecast. And then you can start saying, okay, this I believe, this is too conservative, this is too aggressive. Overall, I'm fine. Overall, I want this. I think this is on the more conservative side. So I think that's the value in forecasting, providing transparency on the building blocks of the individual forecast, and not just shooting a number out there and say that's it.
Yeah. One of the other polls that we've had is we believe the plug-in hybrid electric vehicles will create a challenge in used car values. We see that if we say yes, certainly, it's 31%. Yes, probably is 46%. So together, this is 77%. So clearly, not everyone is very comfortable with it. Now, I think in the Netherlands, now I do it right, in the Netherlands, there has been a bit of a big history on PHEVs in 2013, I think, because that were the only ones who had a certain benefit. How do you see PHEV versus BEV, Rick?
Yeah, correct. So in 2013, there were subsidies on the company car tax levels for PHEV, and we sold thousands of Mitsubishi Outlanders, V60s, plugins, Amperas, and later on in 2015 also Volkswagen Golf and Passat GTEs. Those caused big market disturbances, also in the remarketing afterwards. Well, PHEV is a complex technology, and we think it's transitional. For example, Mercedes supports this by a recent announcement that they will stop the further development of PHEV powertrains, and we expect that other manufacturers will follow soon. Also, regulations are difficult around PHEV, as CO2 emissions are, according WLTP, always very low, but in real life they're heavily dependent on the driver's behavior, if they charge or not. And compared to BEV, we are more positive for the BEV category.
Johan,
you're muted, Johan.
Yeah. In UK, how is the situation there with PHEV? And also maybe an additional question for UK, because you got the steering wheel on the wrong side, they say always. That creates some additional challenges. You create your own market. You can't export everything to Malta, Cyprus. So what's going to happen there, you think, in the future?
That takes us, and that takes us back to the kind of the core thing about forecast valuations, which is selling the right number of new cars to turn into used cars. And if it doesn't matter what powertrain is in them, if we've got too many of the wrong thing in the used market, then the values are going to come down. And as you're absolutely right, we have an added problem in the UK in that very few of our vehicles can be exported because there aren't that many other right-hand drive markets. One of the challenges also in the UK is, of course, that the government here has committed to phasing out ICE in 2030 and non-BEV in 2035. So the question is there really much point in continuing with PHEV for just those 5 years? I suspect, from the manufacturer side, as Rick has said, the decisions are already starting to be made about where those investments are going to go. What I suspect we will have is a pool of customers who are reluctant to switch over, and they will create that marketplace for electrified vehicles. There will probably be, for shorter term, a reasonable window of opportunity that says the electrified technologies will not be subject to higher fuel costs or taxation costs and so forth. But that window will probably close in order to push everyone else towards BEV. So I think we're probably going to be in a position where it is going to be a bit of a challenge for us as we get towards that 2035.
Okay. Andy, you've got the same view. You're
I think
in the same country, so
I mean, in the same country. I think on a European basis and try to avoid thinking too much about the UK at times. But I think for me the interesting thing has been looking at if you go back to the graphs that I showed before, PHEV was quite stable in terms of its price. When I say stable, it came up in pricing in line with the internal combustion engines. Not quite as strong, but it was certainly there. If you actually look at things like the CAFE regulations and the push that happened there, actually you got this same huge growth in PHEV as you did in battery electric vehicles. That because effectively under those the CAFE regulations, PHEV was still in a zero to low emission sector, and still it was very effective. So why the difference? And I think that probably the difference in that is the acceptability from a customer's perspective. I can become environmental if I go PHEV, get myself my ultra low emissions, but I don't have range anxiety that goes with it. And I think we've seen that as probably the driver behind the fact that the market wasn't overly flooded with PHEVs, and the consumer was prepared to take on that overall demand. Whereas in the battery electric vehicle, it was over flooded, and the consumer wasn't quite ready to take that demand. So I think the interesting thing for me is definitely, and I agree with Matt, that in the near term, PHEV is going to be very much part of the mix. It's going to be the manufacturers have already committed their production, their future plans, etc. And PHEV for the next few years is integral within that. As we know, when we get to 2030 and beyond, some countries have committed to zero in terms of battery internal combustion engines. Some have committed to having a mix of PHEV within that. So overall, I think PHEV is going to be there, but I think it's shown to be more stable because it's got early adoption. It's less of an early adopter curve that battery electric vehicles are. Consumers are more comfortable with it overall.
Yeah, I would like to show another slide a bit, maybe big on screen, and I'm not sure if this has an effect on used car or how to handle used cars in a country. If we see in Norway, it's basically both in private and in the true fleets, electric vehicles or electrified vehicles with PHEV in blue and full electric in green is both. If we then see, for example, Belgium is a complete other aspect. Of course, it's lower, but it's almost only in fleet that they are pushing. It's basically on a benefiting kind, a write down allowances. They really push. I've also ordered an EV because otherwise I can't actually deduct expenses anymore as a company. And in France currently it's a bit in between. Germany, I think, is also a lot of push into the channel of a private more. So how does this have an effect on what happens afterwards in residual value? What happens in used car value? Anyone, any comment on this?
Yeah, I mean, maybe it's interesting to see these differences on one slide, because it's basically what the governments want, is going to happen. I mean, I'm not sure if they know that they want this to happen, but it's probably easy to forecast that this will happen if you look at the different incentive schemes that are in place. In terms of what's the effect of this on used car markets, I mean, we know that for fleet business, it's very clear that holding periods are, somewhere between 1 and 4 years, right? Depending on what particular channel. I mean, for true fleets, it's more 3 to 4 years. So that effect will take a little bit, more time, 3 to 4 years. For private, there used to be the rule that private individuals keep those cars longer, right? So maybe holding them for 7, 8, 9 years. So in the past, that would have been good news. I think for FEV and BEV, the truth is very different, because also private customers are looking into shorter holding periods, because why would they want to take the asset risk, if someone else is doing it for them and there are plenty of offers. So I think in reality, what we see here isn't going to have such a big impact for remarketing. Overall, the number of to be remarketed young cars is going to rise quite steeply over the next years. The supply shortage on new car markets is helping a little bit to ease that, but it's going to go up through the roof. And I think that's a first remarketing challenge in the next 5 to 10 years. More young used cars coming to market, irrespective of private or true fleet.
Okay.
So what I can say about the Netherlands, this market is driven by a magical word called bijtelling, company car tax levels. So what we've seen with the PEVs, with 0 or 4% company car tax, we saw sales exploding. Currently, in the past 2-3 years, company car tax for BEV is around between 4 to 12%, and this year 16%, which heavily stimulates sales. But another side effect here, going to the private channel, is that last year, for the first time, we have a private, or I should say, consumer buyer incentive. 3,350 euros for a new car, and also for a used EV, I should say, is 2,000 euros, which stimulates a private purchase of BEV, and this heavily stimulates the sales volumes, new and used.
So we already saw that, I think, at the forum. Sol from Transport and Environment showed is that they're starting to come used car incentives. I think they're in Netherlands, France, in Germany, I think, and I can't keep up with everything there. Is anything gonna come like this in UK or in other countries?
We're about to lose our new car incentives, I suspect. I mean, the UK government has been reducing the level pretty much every year now. It's down to £1,500, and there is a price limit as well, which is relatively low given the pricing of battery electric vehicles. So I'm not really sure we're going to see much support for used purchases. It would be nice to have some of the benefits that we've seen in Norway, because they clearly work in encouraging consumers to move across. The problem, of course, is cost. And offering, we don't really have toll motorways in the UK, but offering things like that and so forth is great if it's manageable in terms of cost. And I just don't think that is here. I hate to say it, I think we're probably more likely to see stick than carrot. A lot of the cities in the UK are starting to bring in clean air zones, low emission zones, and in some cases they're talking about zero emission zones in a number of cities. That then becomes an issue, include also on some highways around, can we push people into including used buyers into an electric car by making life a little bit too difficult, too complicated. So the cynic in me sees us probably going down that path here.
I think that from my side, looking at the chart you put up before, I think that really exemplifies some of the challenges that forecasters will have, and also exemplifies some of the issues that remarketeers will have. Effectively, what you showed before was the fact the influence of local taxation regimes on the uptake of the new car registrations in battery electric vehicles relative to internal combustion engine. Interestingly, you split it down into channel, but at the end of the day, clearly these incentives will have a difference. And each country has its own set of incentives. Each country has its own impact as a result of that. And if I kind of jump back into the just the land of internal combustion engine, yes, we've got certain markets with BPM and etc. In terms of registration taxes. But actually, once you get into every country having a specific taxation regime that is different on battery electric vehicle and low emission vehicles to incentivize them, then means that you can look at that country's taxation regime. And we're just about to be launching our residual value forecasting product shortly. But we're looking at individual country taxation regimes, but we're also looking in a lot of detail at the counterbalance of cross-border arbitrage. Example, looking at the pricing of Denmark, for example, it's our organization's home country, has traditionally been a feed out country because of its high taxation, but pre-tax, very low pricing. But interestingly, if you then take battery electric vehicle pricing, the German market is in the reverse. I mean, it's now pushing cars into the Danish market as opposed to taking cars out of it, and it's that is then actually stabilizing influencing battery electric vehicle pricing in the Danish market because of the excess supply that's being pushed into it from the German market. So it really starts becoming quite a complicated series of movements. And in terms of forecasting residual values and setting residual values, there is a need to look at the country that you're forecasting in, that country's taxation regime, going back to my supply-demand ratio, what that looks like. But actually, you also have to think about what is the kind of soak temperature of residual values across the whole of Europe and what that environment looks like. And from a remarketeer's point of view, really start focusing more and more and more on making sure that your remarketing channels are very much biased towards a cross-border sales opportunity, because as you go in, if your market is oversupplied with battery electric vehicles, the only route you're going to have to go is to push them out into other markets. And therefore, you need to make sure your remarketing channels are mapping closely with where you're forecasting the pressure points on your residual values in total.
So yeah, indeed, I think cross-border, I agree, is key. Of course, IMET doesn't have that opportunity in UK, which is a challenge. Maybe I would like to take a question from Thomas, which I think is quite interesting, because I'm not sure if you got a view that within leasing companies RV forecasting, EVs are a bit more standardized in the way they set RVs, but indeed, are there segments within the EVs, maybe based on range, maybe based on whatever, or loading or whatever have you, that should be split almost? That, for example, even in the same model, there's different RV forecast because of those, because of range, because of some specific features. Not sure who's has a view on that.
Maybe I can give it a go. I think there is of course a risk that the cost for the battery, the cost for the electric powertrain, they add a lot of costs, right, to the car. So the smaller the car becomes, the greater the question whether people are able to cover up the money on new car and used car markets. I mean, we see how diesel is phasing out of small car segments. And we see also when the first EVs were launched that, launching them in small cars would have made so much sense, but it just didn't work out because they were becoming too expensive. Residual value risks were too great for that level of suitability for daily use. So they started to build toys for the rich people, right? And they seem to be working out well. So I think in answering that question, we're moving gradually from the bigger car segments to the smaller car segments. And as long as that is being done, I don't think there is a particularly higher risk, if we see C-SUV BEVs than, for example, a D-SUV BEV. So I think that's working out well that way. And in terms of range, I mean, at the moment, all the BEVs that are in the market haven't reached the sweet spot of range, right? So range is an important decision-making criterion. When Pierre talked earlier with you, he made that point as well. What about the temperature? How does this impact? Yeah. I think if we are reaching real mileages of 500 to 1,000 kilometers in that area, we wouldn't be worried too much about differences in RVs. But as long as real driving ranges are under 500, people are constantly questioning, is that good value for money? Should I opt for something different? Is this suitable for my daily use? Is the infrastructure ready? No, it's not. So as long as we're in that area, range is just a very important criterion for RV setting and remarketing.
So we as Autotelex in the Netherlands, we see a few factors like charging networks from brands, over-the-air updates and energy consumption as the main differentiator in RV perception between the OEM brands. A charging network takes away range anxiety for a certain buyer group. Over-the-air updates enables new functionalities during a vehicle life, so it kind of rejuvenates the vehicle during the duration that it is being possessed. And energy consumption is really important. And on these topics, we see Tesla as one of the main manufacturers still, followed by Polestar, and this reflects in their residual values in the Netherlands.
Okay. Any final comment on, and I think just one sentence, so it's really just one half a minute even, on what would be your advice for all OEMs or lease companies on what would help residual value, not forecasting, but value, how to optimize value in, let's say, 2027. Andy, one statement.
Effectively, if it's not forecasting, it's got to be remarketing. It's making sure that you have, as I said before, huge imbalances are going to be occurring as a result of different taxation regimes. Cross-border is going to become greater and greater. So if anything, I would focus on ensuring that you've got as broad a focus of cross-border remarketing capability as you can do. And you've got systems and data that if you are a remarketeer, that you can identify who are the buyers of the cars, in what market, down to dealer by dealer by dealer level, to actually be able to say, if I've got this car, where am I going to sell it? Who's going to be the dealer that buys it? Because I have to find that dealer and sell them that car.
Matt, can you do it shorter?
It's information. It's knowing what's coming, when, and what you're going to do with it.
Okay, good. Rick?
TCOs are extremely low already for EV, and we don't see that back in leasing rates. And EV is extremely suitable for private lease, rental, and sharing solutions. So we should focus on that.
We're trying to give the market some confidence here. Christof?
Yeah, I'll address that question in my breakout session in 2 minutes. But one answer would be hold off launching low-range variants. Yeah. Or multi-range variants for a model. If I were an OEM, I wouldn't do that.
Okay, then the only thing that I need to do is very much thank the expert panel. Thanks for your contribution. We could have been going on for another half an hour or an hour, certainly, but we're going to get some other sessions in. I want to show you the content of the 2 breakout sessions that we will do now. So thanks, Andy, Rick, Matt, and Christof. The 2 breakout sessions that will start in a few seconds is from our gold partners, Autovista 24, part of Autovista Group, and Stampede. You can see more details in the Hopin platform, but here you've got an overview. You just go on the left of your screen, and there you will see just on the stage, I think, sessions. You go in sessions, and then you choose one of both. And then we see each other back at 3:30 after break, because after that breakout session, you have a break until 3:30 Central European time. If you come earlier on stage, there will be a screen, a PowerPoint, which explains the timing to start again. So enjoy the breakout sessions. See you back at 3:30 on main stage. Thank you.